TV18. This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
It's the best kind of a day, right? You come out of a holiday and then you go into a holiday. So, tough to beat this one.
And go into a weekend, right? Not just a holiday. Yeah, so
That's true. Good to have a break, right?
But next week is a big one with the budget, and then you have the US FOMC. So just got to save all your energy up for that.
Nigel has watched Pathan, right? He's going to pepper the Bazaar Morning Call with Pathan dialogues today.
Tell us, how was it? Is it worth the hype?
It was a thriller. You have to go and watch it for the man. Shah Rukh Khan, he comes in there and delivers the goods. You know, it's like, just to relate it to cricket, it's like MS Dhoni coming in there. The team was struggling. He's come in there and played an absolute cracker. You know, just look at the collections, look at the performance. I'll tell you what, that man's really... He's done a splendid job, and you have to watch it for him. It's a thriller.
All right. Okay. That's good to hear. I mean, and the Bollywood also needs it,
Are you
right?
going to watch it then this weekend?
I don't know. I mean, depends on the dialogues which Nigel will deliver over the next two and a half hours.
In the spot.
All right. Well, let's get this rolling. So we've got, markets globally which are looking better. I mean, they're steady. So we were out for 2 days. I mean, so basically you've got 2 days of US market reaction to respond to. It's not huge or anything of that sort. Very, very steady, decent kind of price action. The Nasdaq is up about 1.6% in the last two sessions. The S&P is up a little over 1% or so. The dollar has not really moved that much. It's weakish. That's where we want it to be. No real big move in the 10-year. Although, I mean, day on day, one day a bit of a sort of sell-off in the yields. The next day, a rebound. So net over the last 2 days, not very much in that sense. US economic data, especially the one that we got last night, and 3 sets of data points tell us that things are not as bad, right? I mean, all this call of recession and the growth slowdown, etc., in the US, at least the data is not telling us. It started, of course, with the GDP numbers. We'll discuss more on the GDP, etc., with our guests later. But the number was the quarterly annualized number was not bad. You had the home data, and the home sales data, which kind of indicates that maybe it's bottoming out. The numbers are starting to bottom out. And you also had jobless claims, which registered a surprising fall. Now, jobs are the number one thing which the Fed watches, and the jobs market, according to this second or third in a row data point, this is weekly data, the jobs market is still pretty tight. And I think it's interesting. The market is starting to respond to data in a very different way as compared to 22. Just go back and think about what was the sort of dynamic at play. Bad data was good for markets, good data was bad for markets. But, I mean, if you observe what is happening in 2023, it's changing a little bit. Good is good back again. I mean, it's not inversely correlated. That's interesting to see, and I think there are implications which we can talk about. But I think the dynamic per se is changing. The market is not selling off when data comes better than expected on fears that Fed will tighten. Maybe the market is getting to that point where they think, well, the Fed perhaps is closer to being done. And I think that is what market pricing of what the Fed will do is indicative of as well. Let's come to the market here, right? The Nifty took a very sharp cut, and people were scratching their heads and trying to figure what was the big dominating one single driver. There wasn't one. It was a bunch of things, but no real one single headline which took the market lower. What Wednesday's sell-off did was it has taken us back to the lower end of the trading range. 17,800 to 18,200 has been the range, and now we left off at closer to the lower end than to the higher end of this particular range. As we start this session, the big support is about 1% away. That is 17,761, which basically was the low which was made on the 12th of January. So, as I said, a little over 1% or so. On the way up, the 20-day comes into focus. That's at about 18,036. And then the high, which was day before yesterday, I mean, that was Tuesday's high of 18,201 is the next level to take out once the 20-day goes out. The Bank Nifty broke the 22nd December swing low on an intraday basis on Wednesday. That number is 41,569. The question is, and then it bounced, right? So the question is, And I'd like to look at this, the price action in this context. Is the Nifty Bank indicating a bit of a double bottom? And I think today's session is crucial. A decent close above the 41,569 level, I think will add bulk to the argument that maybe things are going to get slightly better from here on after what has been a bit of a lackluster sideways and, of course, painful start to 2023 so far. Guys, hi.
Hi, morning. Actually, the adjusted Nifty rate is up more than 100 points now.
Yeah.
So the indication, the SGX Nifty rate that is. So the indication is that the start will be well in the green this morning. Don't lose sight of that. But then again, the Nifty continues to face resistance at that 18,200 mark. So we're going to watch for that level very closely. The 18,200 level on the upside. Remember, the Jan series is behind us, but it's the biggest loss that we've seen since September of 2022. The Nifty was down about 2% odd. And the problem is that large FII selling has resumed. So yesterday as well, that's on Wednesday, the FII sold almost 2,400 crores. Having said that, there is a churn in the market and there are new leaders emerging. Autos have become the new leaders in the market. Very good numbers coming in from Tata Motors, Bajaj Auto, Amara Raja Battery. In fact, Tata Motors reported its first profit in the last 2 years. Bajaj Auto reported record high EBITDA. JLR saw free cash flow positive. So lots of positives in the auto space. Now today I'm watching out for Bajaj Finance. Comes out with numbers. It's gone into its numbers very weak. The stock is down about 20% in the last 3 months. But the earnings are expected to be strong. So in that context, will be very interesting to see how the run-up is to the numbers. And for the market, I mean, we've been talking about the levels ad nauseum. On the downside, it's 17,800. On the upside, it's 18,200. Today, of course, the start will be in the green, but all eyes will be on the US FOMC meet that takes place next Tuesday. Then you have the union budget on Wednesday. And of course, we go into today's trade with some positive cues from the global markets as well. The Dow has been well in the green.
Well, that's right. If you just look at the SGX Nifty, we need to compare it with the Nifty futures. So between both of them, you're actually looking at a 35 to 40 point bump up just to kickstart trade. The Nifty futures ended at around the 17,980 odd, and we're likely to start off at around 18,020. So just keep that in mind. We start off in the green, but my sense is you get a bit of a dip intraday. Observations at the start of the February series, well, the Nifty open interest, it's a little below 1 crore shares odd. So we're going lighter into this big event. That's both. We have a big global as well as a domestic event. Global event will be the Fed and domestic event will be the budget. So little lighter at the start of the series on the Nifty open interest, which is normally what we see. The FIs, they're net short on the index as well. But the evidence that we have of the last few series is when they are net short, it's not such a bad thing. Just take a look at what happened in October itself. You had the FIs that were net short on the index, but they were aggressively net short. And in fact, we had a bit of a relief rally out there. You had a 5.5% gain. Not to say that it can happen again, but the point is that you just require some bit of good news that could, take us higher. Now, even at the start of the February series, the short positioning is at around 62%, long positioning at around 38%. And since, the clients, that's the big HNIs, family offices, etc., have been getting it right, I think we should look at them as well. So the FIs are net short on the index, but the client positioning is net long. So they have 69% of their positioning on the long side. Let's see whether or not the clients get it right yet again. In terms of crucial levels that we're looking at, well, the 100 EMA, the Nifty Bank almost ended at those levels. Remember, it was a 1,000-point cut on expiry day itself. So that's a crucial level, 41,500 odd, very, very important. It holds that for today's trading session to give the bulls a bit of some hope out there. On the technical side for the Nifty, well, the 100 DMA will become a bit of a resistance in the near term. That's around 60-70 points away from where we closed in, on Wednesday's trading session or on expiry day. The recent low, 17,760, well, you're hoping that this level holds out. Otherwise, you could easily see, a sharper slide. The point is, don't be very, very brave. Just try to, get through these next few trading sessions, and then you get a better trend. But it's crucial that the 17,750 odd level holds out, and for the Nifty Bank as well, that 41,500 odd level.
All right, Nigel, so those are levels to watch out for and data as they stand right now. Well, before we start, let me tell you what is lined up here in the first half hour of the show. We get you updates on the markets across the globe. Dan Feynman of Credit Suisse will join us to discuss the global trade setup. Our research team will bring you CNBC-TV18's list of top 10 stocks of the day. And at around 8:30 this morning, we do a fundamental stock check with Prakash Diwan. So that's the lineup here over the next 30.
Okay, so we have a couple of equity views coming through. First one coming in from Chris Wood of Jefferies, who says in continuing meetings with investors this week, Greed and fear finds little pushback on the positive view for Asia and emerging markets, with most discussions focused on the tactical issue of the relative attractions of different markets. He says it is widely acknowledged that India remains at risk tactically because of the need to fund increased positions in China, but there is widespread agreement that India remains the best long-term equity story in the Asia and emerging market context. He says to deal with this conundrum, investors seem to be reducing exposure to high PE Indian consumer discretionary stocks rather than reducing core bank holdings. Finally, he adds investments in SBI in the India long-only portfolio and will be removed and replaced by an investment in SBI Life Insurance with a 6% weighting, while the investment in HDFC Bank will be increased by 1 percentage point by reducing the investment in HDFC Life Insurance by 1 percentage point.
And Gautam Dugar of Motilal Oswal expects markets to stay range-bound and take cues from earnings season and the budget in the short term. He says the results so far are in line with expectations. Expect the consumption space, which has reported weakness. He adds that BFSI as well as tech companies have met expectations, while autos have beaten estimates. He also expects fiscal consolidation to continue in the budget and the government to prioritize manufacturing and investment via capex spending. He also expects some handouts or relief to the bottom of the pyramid to propel consumption.
All right, let's get you some money market views as well. On the rupee, Parul Mittal Sinha, Standard Chartered says the dollar INR rebounded sharply from lows of 80.95 seen earlier in the week as higher oil prices and dollar buying by PSU banks capped the downside. She expects the dollar rupee to trade in a range of between 81.25 to 82.25 to the dollar next week with a sell on uptick bias. She also expects the rupee to continue to underperform in 2023 due to the still elevated trade deficit.
All right, and on the bonds, Parul Mittal Sinha says domestic yields continue to trade range-bound ahead of multiple risk events next week. That is the Union Budget and the FOMC on the 1st of February. India's maiden sovereign green bond issuance earlier this week saw strong demand and greenium in the market. She expects the Indian benchmark 10-year yield to continue to trade in a range of 7.25 to 7.40%.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. Well, we're looking at Tata Motors, Dr. Reddy's, Bajaj Auto, Torrent Pharma, Amaro Raja, DLF. They are stocks on the back of positive news flow. But on the flip side, you have Cipla, Tata Elxsi, Patanjali, as well as Dixon Tech. They are stocks that could open up in the red.
All right, Dan Feynman is joining us now. He's co-head of equity strategy, Asia Pacific at Credit